Press the bell icon on YouTube and don't miss another update.
There is an expression which I remember from my early childhood, and then I thought it disappeared from our lives. That was bank failure. A bank failed. I do remember that our family, my parents had an account in a bank called Palani Central Bank from the south, and the bank shut down. It went bankrupt, and every few months we'll get a check of 10 rupees, 15 rupees, 20 rupees. As the bank was liquidated, you got some money back, and it kept on happening for a long time. Maybe we got 5%, 10% of our deposits back, our tiny deposits back. But now, for many years, in fact, for many decades, we thought that bank failure was an impossibility. And it is not an illusion. Bank failure has become more or less an impossibility. Yet, just when you get complacent, something happens. So one bank has now collapsed. This bank is a cooperative bank. It has collapsed in Maharashtra. Its name is PMC Bank, Punjab Maharashtra Cooperative Bank. It is a small bank by the standards of our banks, but by the standards of cooperative banks, it's among the bigger banks. It's among the 5 biggest cooperative banks in India. Now, you would think a bank is a bank, small or big, doesn't matter. And also, when a bank begins to roll over, or if things really go wrong with the bank, then RBI moves in and makes sure that all depositors are protected, which might happen in this case also ultimately, but not quite yet. The example I can give you is Global Trust Bank. Before the bank could roll over, RBI got another bank to acquire it, take it over. Bank of Rajasthan, ICICI was made to acquire Bank of Rajasthan. So that has been happening, and RBI takes regulatory action. Something like this may also happen, I'm quite sure will happen in the course of time. But let me try and declutter three questions. One, what happened with this bank? Number two, what are cooperative banks and why are they different? And number three, what is the way ahead? So first of all, what happened with this bank is precisely what could happen with any bank if it was to roll over. Which means banks, I had explained this in an earlier Cut The Clutter when we looked at the glossary of all the financial terms. A bank rolls over when the bank's bad loans or bank's liabilities become higher than the capital it holds. Which means bank gives out loans, the bank has deposits, but deposits are the depositors. But the bank also has capital, which means that is the investment the bank and its shareholders have made. In the case of this bank, it did look like it actually had adequate capital. So its CAR, capital adequacy ratio, which is the formula is tier 1 capital plus tier 2 capital divided by the bank's liabilities. But let me not go into such technicalities. Effectively, if the bank's capital is more than 10% of the bank's loans or what the bank's liabilities are, then it's considered adequate. This bank's was 12%. So to that extent, it passed that test. Second, until the other day, what were its NPAs, non-performing assets? They were 4%. 4% is not nice, but in today's market, when government banks, PSU banks are running at double-digit NPAs, 4% is quite healthy. So just a few weeks back, you would not have thought something drastic was going to go wrong here. So what it means is, I'm using very layman's expressions, if your capital adequacy ratio is 12%, then if 12% of your loans go wrong, then you have the capital to back it up. But what happens if you already had 4% bad loans? What happens if 73% more of your loans go bad? Which means 77% of all your loans go bad. Now, how can it happen in a bank that suddenly from 4% bad loans, it has 77% bad loans? 77. That is the key thing. How did that happen with this bank? Now you will think, bank's total deposits are about 11,000 something crores, 4% of bad loans already. If 73% have also gone bad, that means thousands of borrowers or hundreds of borrowers are not returning the money. That is where the crux of the problem lies. This 70%, 73% bad loan belongs to one borrower. And who's that one borrower? It's the usual suspect, HDIL, that is Housing Development Infrastructure Limited. It's a Bombay company. They specialize in doing slum resettlement and building tenements and stuff like that. Very powerful company, but a company that in turn also went bust just a few months back. And as it went bust, there was a domino effect. It took down with it ILFS. ILFS was going down anyway, but it had liabilities to HDIL. Similarly, Yes Bank came under stress because of exposure to HDIL, and there was India Bulls. So this was a kind of quartet which brought down the financial markets about 6 months back, 8 months back. Now it turns out that this bank, PMC Bank, with just about 11,000 crores of deposits, had loaned, think about it, 8,800 crores of its money to one borrower, that is HDIL. And HDIL has now gone bust. That company has gone effectively bankrupt, although they are claiming that they will pay back this debt, but right now they have no wherewithal to do so. So a bank with 12% capital, 4% NPAs suddenly became 77% NPAs. Now, even to a simple mind like mine, it's evident how this bank has gone wrong. And while this was happening, the bank had made, it seems, inadequate disclosures to RBI. It also seems that in RBI's oversight, audits, etc., they had not quite found out that so much of this bank's exposure was to one entity. Now, how can that happen when RBI is otherwise so vigilant, so careful, it watches everything very closely? It's only when they realized what was happening that they also panicked. They pressed the panic button and they said no depositor can withdraw more than 1,000 rupees. And then when the panic set in, they said, all right, 10,000 rupees. But then the domino effect had set in, because what happens is that with one big cooperative bank are linked many small cooperative banks. Because what do small cooperative banks do? When they get their money, deposits, they deposit them with a big cooperative bank. So they have also panicked now because their money is lying here. This is causing a panic reaction among cooperative banks. So what are cooperative banks? Second question. And how are they different from other banks? First of all, other banks, scheduled banks, have to have a large capital. Even what is called as small finance banks have to have 100 crore capital. But other banks, bigger banks, need a lot more capital. Second, these banks are fully regulated by RBI. Cooperative banks, because they are also governed by the cooperative laws of the state. There was a cooperative law initially passed by the British in 1904 because they thought that zamindars and lenders and sahukars in villages were exploiting farmers. So in 1904, the British passed Cooperative Credit Societies Act, which was then modified and improved in 1912 as Cooperative Societies Act. So that act, and that has its own sections and laws and principles, that also governs these banks. Second, these banks are not listed in stock markets. You don't know their valuation publicly, and they don't go through the same market diligence because market also checks out your value and what's happening. Cooperative banks are owned by members of the cooperative. So you buy shares in a cooperative like you might buy in a company, and the rule is that only a member of the cooperative can borrow. So they are very much like your credit societies, that 100 people in a building get together, they start pooling in money, and then a needy one can borrow from that pool. So principle is the same. In fact, if you go back in the history of cooperative movement, then the first cooperative society of any kind was set up in Scotland called Fenwick Weaver Society in 1700 something. And what did the society do? That society pooled in money to buy oatmeal in bulk and distribute cheap oatmeal to weavers, its members. That was the first society about 250 years ago. So that is the purpose of these societies. Now, because they are under the state government, the cooperative laws and RBI, so a lot of things fall between the cracks. And that is what is precisely what's happened in this case. That's happened in many other cases also. In fact, the last big bank failure in India, if you remember, was something called Madhepura Cooperative Bank in Gujarat, and that was in 2001. And later it had turned out that that bank had a very large exposure to one particular broker who had gone bust. That was the 2001 stock market scam. You remember the name of that person? Remember the KP7 shares? KP was Ketan Parekh. So that bank had exposure to Ketan Parekh. For this bank, HTIL is the new Ketan Parekh. And that's why it has gone down. So in principle, it is impossible for the RBI to keep the same diligence over cooperative banks as it does over other scheduled banks. Now, how many of these banks are there? So you'll be astounded with these numbers. There were 1,926 or 7 banks in 2004, depending on when you count. Today, there are 1,551 because increasingly RBI has been forcing them to merge, liquidate, because it's impossible to monitor or to supervise so many banks for the RBI. Chota banks everywhere. They had a purpose at one point when Indian banking was not spread out, when scheduled banks were not available in villages. But increasingly, they are becoming less relevant. So there are very healthy cooperative banks also. But essentially, it's an impossible task to supervise so many banks. So numbers are coming down, but still 1,551 cooperative banks exist. And once again, there are these dual responsibilities. So in 2017 also, RBI and the state governments got together and they made another 129 banks merge. So that is a work in progress. After which a committee was set up by RBI under its Deputy Governor R. Gandhi to look at the status of cooperative banks, and it came with a report with 3 key highlights. One, that RBI should have more regulatory powers over these banks, but once again, no RBI can regulate 1,551 banks. It's impossible. It's impossible to do it as much as they might do another bigger bank. 2, there should be a process of winding up and merging these banks so you have fewer bigger banks. And 3, urban cooperative banks which are doing very well and which have a large deposit base, etc., and which have the ability, should raise more capital, which is at least 100 crores, and then be given license as small finance banks, because RBI now gives a license as a small finance bank, which is regulated then like any other bank. So that is a work in progress. Now, what is the way out? This has now spread panic because one bank has collapsed. Everybody thinks my money in my cooperative bank will also collapse. The principle of cooperatives was, cooperative movement has also done great things. Don't forget that the magic of Amul, the entire Gujarat milk miracle that Varghese Kurian brought about, was built around cooperative societies. But for that, you need people of very good intentions at the top, and then members also have very good intentions. Whereas what has happened in large parts of our country, but especially Maharashtra, to some extent in Gujarat, but Maharashtra is the home of this cooperative banking movement or business. Because Maharashtra also became the home of cooperative sugar mills. So sugar mills got linked to banking, people got rich with sugar, they could deposit their money in banks, they could take shareholding in banks, and obviously politicians realized that this is a very good business, because if you can control a cooperative bank, then you can decide who will get a loan, who will not get a loan. So this became a source of largesse. So key politicians in Maharashtra, at one point of time, almost everybody had an interest in a cooperative bank. In fact, even now, it is difficult to find one who doesn't. So in 2015, state government had passed a law that said that if a member of a cooperative bank is under investigation in any other case or under probe, then he cannot become a director, office bearer in another cooperative bank. So there is a nexus in Maharashtra, that is cooperative banks, cooperative sugar mills, and if I may say so, private universities and colleges. This is the revenue model of Maharashtra politics, because then you can get around the law, you can get permissions, you can take agricultural land, build a college there, you can set up a sugar mill, raise money through a cooperative, cooperatives form an association, you control votes, you control finance, you control votes, finance, seats in these colleges, colleges produce money, sugar mills produce some money, and cooperative banks, they might produce some money, but they produce a lot of patronage. That is the nub of the problem in Maharashtra, and the collapse of this bank has now brought it to light, because this has come at the worst possible time for Indian banking and Indian economy, because there is a lot of anxiety about the state of India's banks right now. Already as this happened, today you saw shares of India Bulls collapse today, shares of Yes Bank, which has been doing a very valiant job of trying to put things back together, they also collapsed 15%. So as share prices collapse, the ability of these banks to raise more money for capital also goes down. So there is a crisis and there is a domino effect. Having said so, this bank tells you, especially underlines to you, if this peculiar aspect of Maharashtra politics that I spoke about, and I will tell you a story about this. When Pratibha Patil was nominated by the Congress party to be its candidate for president, our reporters are finding many stories about the cooperative bank owned by her family, which had done many funny things, sugar mills owned by her family, which had done funny things, and educational institutions. So as those stories were going on, this is something I wrote about earlier. I was visited by a senior leader of the Congress party carrying a basket of mangoes. You can't say no to a basket of mangoes in the summer. You know, presidential elections were in July. Late night, and he came to my house and he said, I've only come to say this to you, that come what may, on 24th of July, she will represent the glory of the Republic. So why are you doing these stories? I said, but why should we not do these stories? These are all the wrong things she and her family have done. So he folded his hands and he said, you find me a politician in Maharashtra who doesn't have one of the following: a cooperative bank, a cooperative sugar mill, and an educational institution. Then I will, if you can find me one, then I will tell you that this one is particularly bad, someone can be better. So that is the reality of Maharashtra politics. So what this collapse has exposed is not even so much the crisis in cooperative banking as an ugly, murky reality of Maharashtra politics. Okay?